Okay, this is our Project One group presentation where we will share a few cultural insights about Mexico that are important as we consider selling our product in this market. Each section will be presented by these students as listed, and we will start with section 2. In this section, we will review the Hofstede cultural dimensions. While Mexico and the United States share some similarities, there are several key cultural differences that directly affect how business is done. One of the most important is power distance. In Mexico, businesses value clear leadership and hierarchy. Decisions are typically made by top leaders, and employees expect clear direction. For us, this means we should respect titles, communicate with decision makers, and present in a clear and structured way. Another key difference is individualism. Mexico has a more group-oriented culture where relationships, trust, and loyalty are very important. Business is often built on long-term partnerships rather than quick transactions. We should show our commitment to building strong, lasting relationships. Mexico also has a high level of uncertainty avoidance, meaning businesses prefer proven solutions, clear plans, and low risk. To be successful, we should clearly explain how our product works, provide detailed timelines, and highlight reliability and support. Lastly, Mexico places a strong value on work-life balance and personal well-being. Overall, by respecting leadership structures, building trust, and providing clear, well-organized proposals, we can position our company and our product for success in the Mexican market.
In section 3 of our project on Mexico, we discuss communication and scheduling. With communication in Mexico, there's a big power difference between management and frontline workers. And so a lot of workers are expecting to have decisions come down from management. The communication style is much more high context with a lot more verbal cues and body language and little things that you need to look for as a manager to understand maybe the context of the conversation. With Mexico, scheduling and time utilization, Mexico is very flexible and prefers to look at relationship building as more important than hard deadlines. Effective leaders are going to need to adapt to these changes from what they might be used to in their culture, and so you really want to try and find a good understanding of cultural norms there in Mexico. Section 4, negotiation style and strategies. Mexico is a great place for bargaining. They definitely are more relationship focused, and so they're looking for long-term and trusting relationships. Definitely matters more than that quick deal or that quick win. They want something that's going to last, which means it's a gradual process. It's not going to happen overnight, and it's going to kind of work its way around the problem until the deal is made. And during that, they're going to have strong bargaining stances. And so they're going to want to look for those concessions. So you want to watch out for, oh, this is my last and final offer, or hey, this is my best deal, starting out with the best deal, because they will want some sort of concession and give up so that they feel like they're getting a win as well, right? So with this, you want to make sure that you emphasize the mutual benefit to both parties, that this is a win-win deal for both sides.
Mexico has a federal democratic republic with a presidential system where power is divided among executive, legislative, and judicial branches. As of 2024, Claudia Sheinbaum is the president, leading the country with policies and emphasize social programs and a stronger role for the state in key industries. Recent political developments have created a mixed business environment. While Mexico remains politically stable and maintains strong trade ties through USMCA, increased regulation and government involvement, especially in energy and in infrastructure, have raised concern for foreign companies. Overall, These developments are consciously unfavorable for foreign business, making regulatory awareness and risk management especially important. Data shows that Mexico's overall economic freedom score is slightly above the global average. However, there are significant international imbalances. Mexico performs strongly in open markets and regulatory efficiency, particularly in investment and trade freedom, which helps attract foreign investments and integrate the country into global value chains. In contrast, rule of law indicators are substantially below the global average, especially government integrity and property rights. This suggests that while Mexico offers relatively open and flexible markets, weak institutions and corruption compromise long-term economic instability and investor confidence. Consequently, Mexico's economic potential is limited not by market access but by institutional quality.
What we need to start a business in Mexico. First, I would like to start with the legal. We need to register our company to get the RSC, that is the taxpayer registration. The second one, we need to have a system, electronic, to make our invoices. The third one is the trademark registration. We need to register or brand to the government. The fourth one, we need to register every employee that we have in the IMSS, that is the Social Security in Mexico. Also, we have taxes, the income tax. We need to pay 30% of our profit to the government. And the second one, we need to have the IVA, that is the value added tax, that we need to add 60% of every product that we sell, and we need to give this 60% to the government. And we have a special tax. This special tax is for alcohol, tobacco, or other products that have excess of calories. It depends what is the rate. We have the income tax. We have another one that is the income tax for e-commerce. That the e-commerce has been growing the last years, and Mexico starts making another rate for e-commerce. Now we have the state taxes. They is the ISN. It is for every employee that we have, and we have the property tax if we own an office or we own a warehouse. Everything that we own, we need to pay property taxes. In Mexico, we have contracts. At least we need to have 5 contracts: articles of incorporation, individual employment contract, commerce lease agreement, and service agreement, and confidentiality agreement. We have the import tariffs and free trade agreements. We need to pay taxes for every importation what we do to Mexico. The first one is the ad valorem. We pay taxes in base of the percentage. The second one is specific. We pay taxes based on the cost of the product. And the third one is the mixed. We pay taxes, they call it mixed because it could be percentage and cost of the product. And we have trade agreements with another countries. The most common trade agreement that we have is the USMCA that we have with Mexico, US, and Canada. This one is for manufacturing industries and automotive industry. Also, Mexico have a trade agreement with Europe for agriculture. And the third one is called CPTPP, that it's included with Japan, Australia, Vietnam, and Chile. This is alternative for importing, avoiding some taxes. Also, Mexico have another trade, but that is called Pacific Alliance. This agreement is with Chile, Colombia, and Peru. This facilitates the movement, the goods, and the people.
Mexico remains one of the strongest FDI destinations in the region thanks to the 3 main factors: its proximity to the US and the advantage of USMCA, a growing market of more than 130 million consumers, and a competitive labor cost with skills manufacturing workforce. There are also attractive incentives, the IMEX program for tax-free temporary imports, special benefits in new development corridors, and simplified business registration with SAS entities that can be created in about 24 hours. Most FDI goes into automotive, aerospace, electronics, telecom, and financial services. Northern Mexico and the Bajío region attract the majority of investment, while the government is now promoting development in the south through the Maya Train and the Transismus Corridor. Altogether, Mexico offers a strong environment for companies looking to establish operation. Mexico is generally open to foreign investment. Only a few strategic sectors remain restricted, such as petroleum and hydrocarbons, the national electric system, nuclear energy, postal service, and currency printing. Some land transportation services are limited to Mexican nationals, and aviation allows up to 49% foreign ownership. For most of our potential operation, this restriction will not apply. Manufacturing and consumer-oriented industry are fully open. Okay, now let's talk a little bit about current economic conditions. Recent macroeconomic trends also help shape our strategy. Purchasing power is rising. GNI per capita in PPP has increased from $18,700 in 2020 to over $25,000 in 2024. GDP growth has slowed to around 1.4%, meaning consumers are more price conscious, so value-driven products will perform best. Inflation has come down from almost 8% to under 5%, improving planning but keeping affordability important. And lending rates remain high, above 1100, so relying on internal funding rather than local borrowing will be the smartest approach.
11, the currency between Mexico versus the United States. And this chart shows that the exchange rates between the Mexican peso and the US dollar from early 2021 to early 2026. You can see that there are noticeable ups and downs over time. Right around 2023, you can see that the Mexican peso is right around 17 pesos per dollar. And then over about the next year, the peso does weaken just a little bit. And it stays around the same going into 2026. So this graph highlights the exchange rates, and it shows how they really do fluctuate based on economic conditions and global factors. And these sorts of things can affect trade and travel and investment between countries. And these two countries are the Mexico and United States. We can see that the relationship between the Mexican peso and the US dollar has changed a lot instead of staying steady, and it has fluctuated significantly. And the main reason for this is because of interest rates. The Mexican peso has become stronger the past 5 years due to interest rates. As of January 2026, their interest rates are approximately 7%, and the interest rates in the United States are approximately 4 to 4.25%. So Mexico does have the significant upper hand on those interest rates. And this just means that assets will look more attractive because of high interest rates. Because Mexico is keeping higher interest rates, they're encouraging foreign investment. Then the currency difference. Currently, one Mexican peso is equivalent to 0.58 US dollars. And so what does this mean? This means that someone traveling from the United States to Mexico can get more value for their money, and someone traveling from Mexico to the United States would get less value for their money. And so basically, whoever benefits depends on which country you're coming from. Clearly, if you're coming from the United States, you're going to get more value for your money. And so if someone from the United States sees that Mexico has higher interest rates, they might be more willing to invest their money in a Mexican bank or in other things down there because they can see that they're going to get more back for their money. Overall, this shows that interest rates and currency strength are closely connected and they do have real world effects.
Today, I'm going to present 3 product ideas designed to address key needs in Mexican market, considering market demands, barriers, and competition. The first product is a smart domestic water purified filter. In Mexico, has most people have access to drinking water, water quality is still a major concern. This creates strong demands because many families spend money every month on bottled water, which also have the environment. Current competition include Rotoplas and Ecofilter. Our product is a smart filter installed directly on the tap, which remove bacteria and heavy metal and use mobile app to identicate maintenance. The main market barriers are price sensitive and doubt about products' effectiveness, especially in highly contaminated water. The second idea is Protect Home Max. Mexico has a high rate of security, especially home burglaries, which creates strong demand for remote home protection. Competitors such as Ring, Amazon, and ADT Mexico offer security systems, but they are often expensive or require monthly fees. Protect Home Max offers an affordable solution with a night vision camera, an integrated alarm, and mobile control, with access to emergency service. The main market barriers are distrust of new brands and concern about technical support and warranties. Finally, the third idea is healthy quit basket. There is a strong demand in areas with low delivery coverage, where families want to have time and transportation costs. Competitors include Rapid and local store, but many don't reach these areas. Healthy Quid Basket focus on personalized food basket for families. The main market barriers are competition with local store and technological barriers such as limited access to app. In conclusion, these 3 ideas address real demand, overcome important market barriers, and are updated to the Mexican market. Thank you.